Hi all, can you see the screen? Right. Just a second, sorry. Yeah, I think now it should be visible to all of you. Okay, somebody just confirm that you can see the screen. Right. Sorry. Yeah, okay, great. Perfect. So, jumping straight into it, guys, wishing you all a very happy new year. Just on a start, 2025, we are starting on a note where we are kind of rebranding ourselves. So, as you would have seen in the invite as well, the mentioned Stylus Analytics. So, what has happened basically is SEBI has come up with some guidelines on how we should, as a research analyst and advisor, how we should be operating. So we are also doing some rebranding and restructuring of our operations, and that is why we are moving to this new name called Stylus Analytics. Uh, as of the philosophy, the work, everything else remains the same. It's just on on actual terms, on paper, how things are changing. That is all that's really going to happen. Otherwise, the services that you have been getting will continue to remain the same. So, like I mentioned, the core offerings will remain the same. Only thing is what we used to call a subscription service earlier, that is going to become called Stylus Analytics. The Safe Gains Portfolio Advisory, that name will continue to with us because that is the philosophy that we have. That we want to minimize risk and maximize returns. That we want to build portfolios for all of you investors, which take care of sector level allocation, which ensure that your portfolios, give a consistent performance where we can expect, like I always say, that the philosophy should be that over a 5-year period, your portfolio value doubles. So that kind of philosophy, that kind of way that we are creating and structuring your portfolio, those things will all continue. No change on that. The other aspect is, a slight thing on the GST becoming mandatory and all that. So there is some changes because of which we need to be charging GST on the fees over and above what we were charging to you earlier. So there's going to be minor fee change. I think for some of you already communicated over the last few months. So basically what we are doing is if your portfolio value is like less than 50 lakh rupees, we are charging you 1.2% of the portfolio value. And if it is more than 50 lakh rupees, it is going to be 1% of the portfolio value. So till I think till now we were only doing 1%, but that one become 1.2 for only of some of you investors for whose the portfolio value is kind of less than 50 lakh rupees. Right. I think okay, just a minute. Uh, why are the slides not changing? Apologies for some of you because we are not able to see the slides. I think now those should be very clear. Uh, like I mentioned, there is a rebrand. So this is the new name and logo that we will be operating with. And like I said, the changes, nothing really changes as such. Only thing probably the paperwork has a little bit of increased. So for all of you, there will be a one-time agreement that we will be signing. So over the next couple of weeks, all of you will be sent report your one agreement in PDF format. What we would request all of you is just to sign that and give it back to us. You can just scan it and email it to us. We'll be sharing our email IDs, everything. There's a refresh and all of that. So we'll be sharing all those. So you can just scan the reports and then we will give you the signed version, which you can also keep. So this SEBI has made it mandatory so that there's a clarity in what kind of services that we are providing, what are the rules and regulations, and also to understand the risks and rewards of investing in equity or in the stock markets as a whole. right? Then there will be an annual KYC that has been introduced. So if you guys will remember, we send you one link of a Google Sheet form wherein we collect details from you. It is usually done only at the beginning of when we are signing you up as investors. But from now on, that is from the calendar 2025, we will be making it an annual service. So every year on your renewal date, roughly, you will be having this. We'll be sending you this. Whatever fresh information is also there, you would have to input. For example, like we used to ask you what is your annual income and annual savings and portfolio value and those things, right? So you may have to kind of update that. It's not a major task, as I said. It's some increase in paper, so probably every time you just have to look back at your overall net worth. We are anyway, for most of you, we are doing this portfolio management, so where we are anyway telling you see these things you need to change, or when you need to buy a property, or when you need to switch between mutual funds and equity. So we are anyway having those discussions. Now those discussion data points will have to be brought in this Google Sheet, wherein we will be maintaining a two-way communication. So you will also be aware of what you have informed to us, and we will be aware of what your profile is, how the kind of calls and the kind of way we need to build your portfolio, the risk profiling that we do for you. So all that will take into action in a proper, I would say, legitimized form. Earlier also we were doing all these things, but these are not really on the paperwork. But now we are stressing a little bit more on that, because to comply with whatever SEBI is kind of. So you may be asking what's changing, why is SEBI interfering right now? The very simple answer is lot of bad apples are there in this market. Okay, now maybe I have been offering you, very in a transparent format the services, etc. But there are a lot of people, especially the ones who are doing futures and options. So they are kind of misleading the investors that sign up with them. They are misrepresenting the fact that invest through us and you can make 30-40% returns, or invest in this stock, this is going to be a multi-bagger. I have always maintained this very clear that when we are buying a stock, we really don't know whether it is going to be multi-bagger. All that we know is there is something good that is happening in that stock, which will play out in the coming months or years. Right now, if it plays out perfectly, it may end up becoming a multi-bagger like we have seen in the last 2 years. But there is not a guarantee. I can never say that if you have bought a Capital Small Finance Bank last week, I cannot guarantee that it's going to be a multi-bagger, right? But people are, even registered RA practitioners, advisors are actually misrepresenting to their customers, to their investors, and investors are falling for the gimmick, because having seen all this, web series and stock markets over the years, people are getting, the feel that they also want a kind of stock idea which can actually, help them get rich quick. Now, this get rich quick, I am sure many of you will appreciate that it is not a reality. Anybody who tries to do it actually fails, on their head doing it. So, but like I said, when SEBI does these things, even the guys who are working properly also get impacted, and we are going to see some minor changes. As I said, we have worked it around. Last couple of months we have spent some time on understanding what is going to happen, what's not going to happen. In fact, I was part of the committee who was actually, in dialogue with SEBI, discussing on what's happening and what changes can be made. So SEBI is actually very, very, kind of, I would say the conversation has been very good between us. They have heard what we said, the changes that we required. Like SEBI was, kind of questioning why you should not have this, why you should not have that, why should you not act as brokers and all that. But we have made it a point, to say that what service that we're offering to you is slightly unique. And you being active investors, you being people today, clients of ours who are really wanting to be present in the market, actually want to be active in the market. We are trying to help you out, take the best decisions in that. So yeah, that was on what's happening. Like I said, we'll try to do maximum things on how Stylus Analytics is going to be. We are actually working on a website as well. So pretty soon you will see our website and everything also going in line, because we'll have a proper online presence as well. Till now, my philosophy has actually been not get into this kind of content creation, trying to do marketing and all that. All of you clients, you would know that you have joined with us because somebody referred to you. Somebody who has been with us from the start would have referred to you, and that's how you are all clients of ours today. We are never into this marketing or never into promising returns and attracting customers, giving discounts, anything. It's all very, very transparent model that we operate in. But we will try to make a digital presence as well from here on, like increasing on that. We have always been having this Twitter and couple of social media platforms which our interns are operating. But from here on, we'll have a proper website also, so that there is, probably somebody search for it, or some of you who may want to refer Safe Gains or Stylus Analytics, as advisors to some of your friends and family. It will help them, understand better on what we are doing. Right. So coming on the market view, broadly, what we are seeing in the last 4-5 weeks is market is kind of stabilized. So we are seeing 1 or 2% up day, 1 or 2% down day, but overall market has been flattish. Like you can see on the chart on the right side, last 3 months the green has been stable, right? What we are thinking now is probably next 2 months there's a union budget that comes in 1st Feb 2025. Then the quarterly results, which are starting from say 16th, 17th of January, it will go on till 15th of Feb. So I'm thinking between 15th Jan to 15th Feb, this 1 month we are going to see some very good action. Market has been stable. We may see either a good upswing or one more round of consolidation. Some kind of a dip we may see. We are starting to get a little positive on the market. That's why you would have seen last couple of weeks we have given 2 to 3 stock ideas to all of you. Only concern that we are seeing is the overall investor sentiment is too bullish right now. As soon as something good comes in, the stock immediately runs 10-15%. So this kind of very high sentimental bullishness may kind of impact us, because the performance of the economy in general has been weak. Okay, like I mentioned in the last couple of virtual connects as well, that quarter results are not really very well. Even the GDP data that's been coming out is not that great. Last on 1st and 2nd of Jan, we saw the news from the automakers, wherein they are saying that the demand was slightly benign in the holiday season. Ideally, the October, November, December periods usually are very good for two-wheeler, four-wheeler sales. However, that was not the case this year. I mean, it was better than last year, but not as better as was expected by the market. Like I said, there is a lot of bullish investor sentiment. This works very well when good news keeps coming. Should good news pause, or should good news start turning to bad news, the fall may be very sharp, right? And the other part is obviously on US presidency, Donald Trump taking chair on 20th of Jan. What is the initial announcement that he makes? There is a lot of currently fear rising that maybe along with China, they will start, some kind of a trade war with India as well. If you guys are active on social media, there is this H-1B visa, which, IT companies use to send their employees to US, or the US employees to hire Indian employees. These things have right now been under a lot of pressure. Between, say, there's a social media war between Elon Musk and Trump on one side, and maybe there are these Republicans and Democrats on the other side, who are like, if you want to make America great again, you need to stop hiring Indians. Why the specific reference to Indians here is because Indians constitute more than 40% of the visas that are generated. And in fact, the Indian community in the US is the highest earning community in the ethnicity in the entire United States. So these kind of things are starting to see, some pitfalls. When one community does really well, these kind of things start impacting the other weaker minority sections. Even though Indians themselves are a minority in US, but people are starting to perceive Indians as a threat. And these things, we are not sure, how what Donald Trump will do in his presidency. So we are slightly, concerned about these two aspects, that there is too much positive sentiment and what US will do. But as I said, we are, in terms of the valuations and these things, there's a lot of comfort coming in. So you will see more calls from us. What we are doing, so I was on 2 weeks in Gujarat and Maharashtra. We did kind of a road trip around Gujarat, meeting quite a few companies, especially the ones in our portfolio and the ones who are not doing very well. Visited their plants, spoke to their management, understanding what's not working for them, And even, in terms of, see, this export business, export is a very, very critical aspect in many of our investor companies, wherein export is the one that's driving the revenue growth or the profit margins. And what has been the case is 2024 as a year has not been very good for exports. So we try to understand, what are the pitfalls. In some of the companies, we have got some very good comfort around it. In fact, couple of names, like this Make Money Organics and all, where we had exited very soon because of the fire incident and all. But what we are hearing is the management is performing really well. They have quite a few products that are going to be approved by many of these countries. And because this is a fertilizer product, as soon as the approvals come from the government, the sales can start very fast. The ramp up is very fast. So we are looking at those names again. We will be coming up with fresh calls. Some of the names that we had already exited, we will we are thinking of re-entering them. The overall theme, like I said, for 2025 is very, very clear to us right now. It is going to be these 3-4 sectors, wherein it's consumer spending, wherein it is solar energy, wind energy is right now not in the back burner. Solar is what we'll be focusing on. Then construction materials. I think if any of you are following social media or these other funds that are there, all of you investors would be having Sagar Cements in your portfolio. We have been, pushing all of our clients to have it since August itself. This is the right time to buy and get into, and then we will see what's happening. And of this, the chemicals industry. Last 2 years, 2023 and 2024 calendar have not been great for chemical industry. Like I said, it's primarily driven by export business, which has been benign. We think this is the year where exports take off again. So we are very, hopeful on that. One important chart I wanted to share with all of you was how 2024 shaped out. So while I'm using the word a tale of two halves, it's not really a tale of two halves because like you would see in this chart, so right from take April 2023, when that red line, the red line is the Nifty PE multiple. Red line, reached above the green line, which is the Nifty index price, right? So it continued to remain in that expensive zone. The PE multiples were consistently about 23x, 24x, whereas we started paying for our investor companies, we started paying 10x, 15x kind of multiples. But this is where the markets were at that time. So after the June election results, it was expected that markets will kind of reset, but that didn't really happen. So you are seeing that one rally here of this is from June, right? So June we saw this blip, and from here the market once again shot back up to become expensive. But then you will notice that from September onwards, this region from September till October, when the quarterly results were coming up, what happened was the Nifty PE kept going up, whereas the Nifty index was flattish. So this was happening because the performance for the 2Q results were not great because the numbers were not good. So that is why so profit is coming down, but your share price is stable. So what happens is the P, the price earnings multiple, which is price divided by earnings, goes up, right? So your denominator came down, but the numerator was continued to be going up. So that's why the P multiple went up. And what we have seen after say mid-October or end of October is that steep correction that we saw. The red line, just look at it. It went about 24 and it came all the way down to 21.5. So this sharp 10% drop happened purely because how the market then corrected. Because earnings, as I said, kept being weak. Even right now, we are slightly skeptical how the third quarter is going to be for the Nifty 50, the top 50 companies I'm talking about, whether they can continue to show a 5-10% year-over-year growth to maintain this kind of earnings multiple. Right now, we are skeptical about that. However, what I would like to reassure all of you is that our investee companies, barring I would say some 5 or 10 names of the overall like 35 odd stocks that we have in our portfolio, just some 5 to 10 names are slightly risky or where I'm a little skeptical. But apart from that, the other 20-25 names that we hold, all of them, we are very, very confident that the growth is going to be more than 15-20%. in profits. I mean, I'm talking about the quarterly profit, right? So that's going to be the case. We will be seeing this from, like I said, between 15th Jan and 15th Feb, how it actually plays out. So this, we have made this a template every year. I mean, last few months, like you would have noticed that we are sharing how the model portfolio is performing vis-a-vis the index, vis-a-vis the 5-year performance, right? So I mean, there's no real change on, if you see on the 5-year chart. Last time to that is the December month call versus the Jan month call, you're not going to see any major change because the portfolios have been broadly flat. That is where the XIRR has slightly come down. What we were seeing at 49, 50%. 5-year performance has come down to 46% purely because the market was flattish. But you should look at on the left chart table as well that the 2024 year-to-date performance has been very strong. The Nifty 50, which I said is the what we all see in the news daily basis, that is around up 9%. But the NSE 500, the Nifty 500 delivered 15%, and we have outperformed that by 2x. The 15% versus we have delivered 37.7% XIRR. Your individual portfolios also, like we were doing a year-end analysis, and we noticed among all of our clients, we have almost 49 clients today, touching 50 now. We just signed another client yesterday, so we are at 50 clients today. That's another update I would like to share with all of you. So among the 49 clients that we had active for the year, we noticed your portfolio performances were between 25 to 45%. So that's the kind of range. Even the worst performing portfolio in our clients delivered 25%, which was much higher than the 15% delivered by the index. I hope all of you are able to appreciate that aspect. Okay, moving ahead. So we are back on the focus talk of the day. I think last couple of months, as we have been saying, one or two stocks that we try to bring up to you, okay, what's happening in that. So this time we have taken up DCH systems. Defense sector as a whole, I would say, has been very, very sought after in 2022. It was the best performing sector, delivering more than 100% gains. Unfortunately, our stocks couldn't really, get into it. The primary reason being some of the stocks like this coaching shipyard and all we booked, and then the stock delivered another 200%. But what we would like to highlight here is this case of DCX systems, wherein we understood where the valuations are reasonable and we were able to understand the product that they are giving. One more aspect I would like to once again kind of give you all as a disclaimer that I personally and Stylus as a group, we will not recommend defense companies that focus on artilleries, that focus on fire. I mean, basically something that can cause, death, or in terms of attacking weapons and warfare and those items. We will not be recommending. We will only recommend defense related stocks that are actually in defense, wherein, for example, DCX systems actually makes sonars and radar machines which are used to identify incoming missiles. These are anti-missile weapons that they manufacture, right? So this is a space that we are comfortable in terms of, as a ethics, we are comfortable being invested in, and we would, recommend all of you also that please do not look at defense as something, that we want to make money by wars. Rather, the only thing that we want as Indians, as people, the world, that geopolitical world that we live in today, is to defend ourselves should an enemy attack us, defend ourselves from unseen circumstances. And for that purpose only, we love DCX systems, because this is a company that has tie-ups with two major Israeli suppliers. And Israel, if you have heard of the name Mossad, is one of the best, in terms of tactical weapon fare that they have. And they have been able to thwart many attacks on their borders, be it by Syria or by other countries. That is the kind of weapon warfare that they have made for the Indian government as well, for the defense industry of India as well. The Israeli suppliers are the ones who are actually giving all these anti-missile systems. The nuclear defense systems are being supplied by Israeli companies, And DCX, why we like is it is in a unique position where they are the only Indian offset partner. So what happened? Like let me just give you a quick, precursor on why defense became interesting. So ever since the US, looked at how Russia and Ukraine was, happening, and whether the Israel Gaza Strip terror attacks and what's happening in Iran. So the Indian government, even for India, what's happening within the Pakistan border or the Chinese border, the focus on spending on defense has actually gone up. We are trying to be, ready should some untoward scene happen. And a lot of what the BJP government has actually done is instead of just buying weapons or machines and devices from outside, they have made it compulsory for all these suppliers, say from Europe, say from Israel, say from US. All these three, the suppliers from these three regions have been asked to have some Indian offset partner. What does Indian offset partner mean is whatever supply. So say $1 billion worth of machines are being supplied by Israel, $300 million, 30% of the order value, they have to procure from India, or they have to spend on Indian defense industry. So they have to get some services from India, or they have to invest or spend in the Indian defense industry to be able to supply $1 billion worth of product to the Indian government. So this has created a unique opportunity for all of the defense companies in India, be it the shipyard companies, be it whether it is Mazagon Dock, whether it is Cochin Shipyard, or be it something like BHEL and SAIL and HAL, Hindustan Aeronautics, or Bharat Electronics. All of these companies who are into defense related work, even L&T for that matter, all of these companies into defense related work have started to become a beneficiary of this government program. Why we liked DCX at those prices back in June 2023 when we gave our first call to buy it around 250 is because market was not happy with the company. Like you can see in the chart, the table below, the last line of the table, the order inflows. So the company had around a 1,800 crore order book when it came for listing, but after that the order book had dried up. They only won, like you see, 600, 500, 520 crores worth of orders for the 3 financial years post listing. And this was starting to become a discomfort because there were other companies like Bharat Forge, BHEL, SAIL, HAL who were getting order announcements every day, whereas a DCX systems was not able to get orders, right? So I did a deep dive into the company. I tried to understand what's happening here. And there I uncovered that they have this asset in being an only Indian offset partner for two major Israel suppliers. So these are the only two players who actually supply to India. And for both of them, DCS is the only IOP. The other part is they got a vendor registration with US based Lockheed Martin and with L&T. So many of the companies, for example, Rolls-Royce that you may hear about their car is actually a very big defense company based in Europe. There's Dassault Systems, DASSAULT, Dassault Systems, another major player in US, in Europe. Now these companies are not, having the exact direct presence in India. So they occasionally provide directly to the government, like even Rafale, RAFALE, which is a popular the before scandal, and even recently they have done. They are basically helicopter suppliers. What happens is these Dassault and these kind of companies do a lot of work via L&T, and when they do this work via L&T, L&T also doesn't do the entire work themselves. They subcontract it, and this subcontract work comes to DCX. Now, this is where we saw there's an asset. We met the management. We did some channel checks to understand what's really happening in this industry. If you guys remember, in 2023, when the Israel, the Gaza attack happened, a lot of news came up. You know how Israel went into a lockdown themselves for 3-4 months. There was no real business happening, and even in those periods, Israel companies. There's a company called ELTA, and there's a company called ISIL. ISIL and ILTA both continue to give work to DCX systems. The only problem in this industry is that the projects, you may see very big order books, but when the project is completed, after that only the revenue comes. So like you will see in the sales numbers of this company, so they were growing very fast before the IPO. from 300 crores in FY19 to 1200 crores in FY23. But even FY23 and FY21, the growth was very less, just 13-14%, which doesn't fit right when you look at all the other defense companies. But the reason for that was, this deadlock in projects coming from Israel, deadlock in terms of execution by the L&T. And this is what was impacting the company's performance. In defense companies today, most of the stock price rally that you are seeing is only happening because they have won orders. Execution takes time. For a Mazagon dock who is having a 30,000 crore order book today, to execute, it will take 9 to 10 years. Even the management themselves is saying 7-8 years, but the reality is it takes 9 to 10 years. The reason is they need to get land, they need to get approvals, then parts need to be imported, parts need to be first sourced. Now, all these things is very time consuming. These are very, very select niche products. And any of these defense companies, because India is a very small player, the sourcing, there is no proper value chain. There is no proper, that you can buy from this product from this supplier and manufacture it. That is not really the case in most of the defense companies. And that is why there's a lot of delays that we have seen even in the past, that these companies are not really able to, deliver. So they may say that we have 30,000 crore order book, which is executable over the next 4 or 5 years, which should mean that they are doing 5,000 crores worth of, or revenues every year. But just look at DCX, look at Mazagon or any of the Cochin shipyards, they will be doing around 2 to 3,000 crore revenues because it is a slow process. Now, this is where we saw the opportunity that DCX available at just 250 rupees. They were doing a profit of 72 crores. The market cap was around 2,500 crores. So just 25-30x PE multiple, very, very safe for us to take a bet. We buy it in June 2023. Then in July, last year in July 2024, there was a rally because the orders started coming in. So in a span of 2 weeks, the company announced 1,500 crores worth of orders. And the stock rallied all the way till 440. And that is when we are like, okay, now the valuations are expensive from 250 to 440. And we know that, it's a slow process. So we recommended all of you to exit half. Again, I know some of you may not have been able to exit, timing issues, but we have as such given an exit. So we are making a note of that. And from there, like I said, always is the case, there will be delays. So they saw, okay, quarter revenue is not that much, the stock started correcting. Then from July 2024 to October itself, the stock corrected by 35-40%, from 440 to 300. And this is where around 290-300 levels, we recommended all of you investors to add it back, add more quantity rather. And today we are in January currently, and we are seeing the stock around 370 rupees. In fact, just on Friday, the company had won 2 more orders worth 700 crores. So that is why for the financial year FY25, they have already won 2,500 crores worth of orders. And the good news is it's written in the order book that all of these orders are actually executable in the next 15 months. So what we are, kind of calculating, like I've shared the future forecast also for the company, that we are expecting that they could do almost 2,000 crore worth of revenues in the next financial year. That is from April 2025 to March 2026, which is, 25% growth versus what they'll be doing for this financial year. So we are very comfortable to hold this stock. So if the company can do say 140 crore, 150 crore worth of PAT, and the market cap today is around 3,500 crores, we are paying still 22x price earnings multiple, which is what you saw like in the Nifty 50. That is the index multiple as well. So we are comfortable to hold for the time being. Not a fresh call. Like I said, for us, fresh happens only when there is comfort in terms of downside. So there is not a comfort that way, but we are thinking that this is stock that can still go back to maybe around 500 levels. So this is on DCX. Some stock specific updates. I've already spoken about Megmani Organics. We did a very quick exit because there was this fire impact and all. So when I was in Ahmedabad a couple of weeks ago, I actually visited their plant. I saw, the unit which was impacted by the fire, and it was actually a very small case. But I think we did the right decision back then to exit immediately around 105, 110 rupees, and today it is around 75 rupees. So that way we have saved almost 30%. We are now reevaluating, okay, what is the best price to re-enter? It's actually back to our cost. So we bought around 80, 85 rupees. It's actually around that number. So we'll update to you when that has to be done. Another update on Aarti Pharma Labs. So this happened only on Friday, post market. The Pollution Control Board of Gujarat has recommended one of their units to be shut down immediately. We are trying to get in touch with the management just to understand on ground what's happening, what is the percentage of business that will get impacted. As such, the stock is almost doubled since we entered. We have entered around 350 rupees and it's around 700 rupees right now. So even if it corrects, because other than this is a temporary thing, okay, this plant shutdown that happens typically happens for a few days, weeks, or maximum few months. We are comfortable to hold that for time being. We'll update on Monday or Tuesday whether based on our interaction with the management, how much is the impact, and if it is going to be a material thing, like I said, like it was in the case of Make Money, if we are going to see material price correction, we will recommend all of you to exit out of it. Next is on Capital Small Finance Bank. So I got a lot of questions after the last call saying that you are so negative about financials, but you have recommended Capital Small Finance Bank. The very simple reason is this is a Punjab-based lender. They have 100% secured lending book. What I mean by secured is, say a small, like a small grocery shop or a small restaurant in Punjab, okay, or a farmer in Punjab who has a very good cropland. Now, for all of those borrowers, Capital Small Finance Bank lends loan to them. However, the unique thing here is for giving a 2 lakh, 3 lakh rupees loan, they take almost 10 to 15 lakh worth of property as mortgage. And this is their home. This is their self-occupied property. So usually what happens is, like we have seen in most cases earlier also, if your own house is actually mortgaged, you typically don't take too much risk, because you know that if I take too much risk, you may end up letting go of your house itself. So then it's a roti kapda makan, your terrace may not be there, you may not have a roof. So that kind of puts most of these borrowers into a, I would say, a box wherein they don't want to take too much risk. And this is a unique position for them. In this environment, I think Capital Small Finance Bank can deliver superior growth. In fact, for the calendar, for the quarter ending December, they have given an update on Thursday morning, wherein they have grown the book by 18%, and their non-performing assets have actually gone down. Whereas for the most of the other players, it has gone up. For Capital Small Finance, it has gone down. So this kind of comfort we are seeing in this company, that is the recommendation we have added. Like the valuations are very, very attractive, which is the case for the industry also. But we will only recommend those stocks where we are seeing comfort in terms of growth as well. Next one, UPL. So some of you would have got a reminder from your RM to buy UPL partly paid shares, also called as UPL PP, which was, I think, at the time of the call around trading at 230 rupees. So broadly, I mean, some of the old investors would remember something called as Bharti Airtel partly paid, wherein what we did was Bharti Airtel shares were trading at 600 rupees, whereas the partly paid was trading at 300 rupees. And like, let's take UPL's example only. So UPL today is trading at 500 rupees. Their partly paid shares are trading at 230 rupees. So if UPL's share price, which is our Diwali pick as well, will go from 500 to 550, a 10% increase, 50 rupees. So UPL partly paid shares will go from 230 plus 50 to 280 rupees. So you will actually make more than 20% returns for the same movement that's going to happen in UPL. So this is called a leveraged play, where as small investors, we can buy more quantity of share and hence boost our returns. This is going to be a short-term phenomena, mind you. It's not going to be like we can hold this for 3 years and make super normal returns. It is going to be for a few months till UPL asks us to, give the balance payment. So the rights issue that happened, what basically happened was the allotment price is 360 rupees. The company has given it to us for 90 rupees. So 270 rupees is more payable to us in a later date. Company will message us, email to us, please pay the balance. I think it will happen only after April or May. It's not an immediate phenomenon. So what we are looking at it is this 270 rupees we can leverage and boost our portfolio performance. I hope this UPL aspect is very clear to you. If you have any further queries, please reach out in the group to your respective RMs. They will properly give you an illustration or even call and explain to you how this is a unique advantage, and all of you should make use out of it. Right, I think that brings us to the end of the conversation. We'll start with the Q&A. Please feel free to post your questions. Okay, the first question is on PGIL, Pearl Global. So this is a stock we have given to quite a few of our investors. Pearl Global is basically a textile company. They were going under a lot of stress because of the Bangladesh news that happened in the month of October. But since then, the situation has kind of normalized. And as for the textile industry is one wherein the growth has been very lackluster for almost 2.5 years because the cotton prices shot up and then it has crashed like anything. We feel there is further comfort. We are evaluating, the stock is almost doubled from our entry level. We are currently evaluating what we should be doing, how much further can it deliver, or probably we can book and switch to some other ideas. You will see an action pretty soon happening. Probably during the month, we will be doing some action on that. Right. The next question is, I don't have a defense stock. Some of you investors may not be holding DCS. You have exited when we recommended 50%, you exited completely. But we have kind of reminded you to add back when it was around 300 levels. So not a concern if you have missed out to it. Like I said, it is not a buy at current levels. So do not buy at 370 rupees odd. We will update to you. Should there be a requirement in your individual portfolios, your RMs are tracking all of that. Like I said, these RMs are dedicated to ensuring your portfolios have a healthy sector level diversification and can deliver the 15-18% revenue portfolio performance that we target. Okay, next is on Reliance. Yeah, I agree. Reliance has corrected us very sharply in the last few months. However, would also remind to you that we have actually been giving partial exits to people who have been holding Reliance. Primary reason, like I said, is Reliance today is a behemoth, right? They have 100 businesses running inside them. It is very difficult to pinpoint and say this thing will do good or that thing. So maybe many people talk about oil and gas or textile or polyester business or geo or the retail business, and any of these things could lever up. But what happens in this kind of a conglomerate structure is when all the cylinders, all the guns are firing, that is when the stock does well. So there was a phase in 2021 to 2023 when they were doing acquisitions through the board, when they were seeing margin expansion throughout their product businesses, and that is when the stock gave that 4x returns. We are currently in a phase where it is not really an ad. We are looking at it, if there's a comfort, probably I think around 900 rupees somewhere. Maybe if the stock comes down and we see, you need some long-term portfolio recommendations in your basket. So maybe at that time we will be recommending to you. But otherwise, unless there is some corporate action happening in Reliance in terms of a demerger or in terms of further acquisitions, we are not really looking at that as a stock idea. Make Money, I've already addressed to you that we will be coming up with some call pretty soon. No further update on that. Sayadna Nitro, yes, actually, to be very frank, even I am a little disappointed with them. Actually, the December month was supposed to be a very strong period for them. You would have seen the stock actually hitting almost 55, 57 rupees also. But there has been rampant selling in the stock. Mostly looks like a lot of investors are waiting to get out, which has kind of impacted us. We are evaluating right now to should we book profits, book loss and exit, or should we give them another 1 or 2 months? So the results, as I said, will be coming up by 15th of Feb. So we'll take an action pretty soon. We are aware that there's a tax planning aspect as well, that probably we could book the loss here and adjust that with some of our other profits, and that way save taxes. So we will update to you on a timely basis on that. Next is on the ITC demerger. Number one, if a stock idea is being talked about by everybody, it is not a good idea. Okay, because if everybody is looking at it, there will not be a scope to make money. So, typically, a good time to make money in equity markets is buy when nobody is buying and sell when everybody is buying. Now, what's happening in ITC's case today is lot of people are buying ITC maybe for getting the hotels business for demerger or the cigarette business that can continue to do well. We have, if you would remember, most of you investors, we have given an exit already on ITC. Only small portions are being held, that too from pure long-term perspective because the entry level cost is very good. We are not recommending ITC right now. We are not recommending ITC hotels as well. Coming specifically to ITC hotels, uh, you may all hear about it, your friends and news channels talking about it. But typically, what happens in a demerger is there are a lot of investors who get the stock of ITC hotels who are not interested in ITC hotels. Example, there's a shareholder owning almost 25% of ITC by the name British American Tobacco. It's a UK based, it's the world's largest tobacco company. Okay, they own 25% odd in ITC, and they are not interested in the hotels business. Now, so as soon as the hotels demerger happens, we may see some deal happening, or we may hear that there is no deal, and the company is that investor from UK is dumping the stock in the markets. In which case, there will be a sharp correction that's going to happen. So I will be tracking that stock, but I am not recommending to buy it right now. Whether it is ITC, whether it is ITC hotels, maybe it lists in the month of Feb or in the month of March, not before that. Whenever it lists, it is not a case that you should definitely buy it. We will recommend to you on a timely basis. Like I said, these are all, we have our team analysts who are actually working on it. So we will know, we will come up to you when it's the best time to buy that. In the hotel space, our best pick continues to remain Sami Hotels, SAMHI. We have already recommended to all of our investors this company. We have bought it around 145 levels, at 127 levels, at 180 levels as well. And right now it trades around 200 to 10. We feel that this is a stock that can actually double in this calendar year. Primary reason being, the performance that has consistently happened. There are a couple of triggers, there are a couple of, things that the management has to deliver for the stock to actually re-rate. So that is why you will notice that last few months you have not probably recommended, like last couple of months you have not recommended anybody to buy. But whenever we see that that thing is actually playing out, or we see there's a comfort on the valuation level, we'll be recommending it to you again. Right. So the next question is on Aegis Logistics. So Aegis Logistics is our pick. We have bought, I think, this year only. In 2024 calendar, we have bought it, and the stock is almost more than doubled since our entry, close to tripled. We are starting to think now that maybe they have a subsidiary called Aegis Vopak, which is going to come up with an IPO. The roadshows for it is going on. I will be interacting with them as well again, maybe in the month of Feb. But for the time being, I think the stock is largely priced in. For some of the investors, you are not recommended yet to exit. For some investors, you are recommended. Like I said, this is completely based on your RM's decision, based on how your portfolio is currently positioned. For now, we would just recommend that if you're holding the stock, please keep holding. Your RMs will give you an exit on a timely basis, and we will try to see, because there are a lot of news that's going to come up in the stock. So maybe there's a situation where this may rally further, or when we have a fresh idea to invest in, we will recommend sell this and buy that. That kind of portfolio level action will be happening. Right now, the stock is actually trading at fair value. So according to us, the fair value is around 800 to 820 rupees. And this is where the stock has been trading. It hit 900 also in the past. Maybe it goes to 1000 also, because when markets are bullish, like how we are today, the good news gets priced in very fast. And so we don't want you who are already having spare cash in hand to miss out on such gains. So when there's a requirement for, that you need cash to buy some of a fresh pick, probably at that time, our RMs will give you exit on this stock. Okay, I think I have covered all the questions. Any other questions, please feel free to rush. We have few more minutes left. Right. So the take on PVR. Many of you would be holding PVR, but some of you may not be. So I think around half of our customers currently would be holding PVR. To be frank, it was a little disappointing what happened in the month of December, because Pushpa 2 was releasing and we were very, hopeful that this will be a trigger wherein the stock hits lifetime high. But there has been lot of, I would say, positive as well as negative publicity around Pushpa 2, even around this movie called what's the movie? Baby John. These kind of releases not being as great as perceived has impacted the stock for time being. But where we see comfort is that these are still available at very attractive valuations. In fact, it is still above our cost for most of you. I think we bought around 1300 rupees and it's around 1330. It's 1 or 2% above. We are watching it closely. Probably we take a fresh buy or we will do some action on it around the quarterly results that's going to come up next month. For PVR, it will come only in the in the Feb early, so probably around that. Yeah, so on the budget expectations, what we are expecting this time is budget is going to be consumer friendly than being business friendly, which was the case for the last year. There were not too many consumer friendly announcements that happened, other than the gold price reduction and all that. What we think is this time specifically, because the economy in the last 2 quarters were not really great, government is working on how they can propel growth further. We may see specifically in terms of infrastructure and customer bets, that is maybe some reduction in taxes or some streamlining in that angle come up. In terms of investors, we are not recommending any tax swaps or benefits to come in. But as a customer, as a consumer of products, you may actually see some benefits coming in. We are positioning ourselves for a couple of ideas on that line also. Very soon you'll see. But right now, probably the focus is more on these construction and infrastructure related companies. We may probably come up with a couple of more EPC players, because you exited quite a few in last calendar year. So we are thinking that some of them that we exited almost down 30-40%, and probably this is a time to re-enter them, because there's a long-term story which is underplay in that as well. Definitely solar will be a theme in the budget. In fact, it will be a much bigger theme than wind. I am expecting that wind will not even be talked about in this season, this budget session. They'll only be focusing on solar and probably on hydrogen fuel. These are the two plays. In the hydrogen fuel space, right now we do not have any proper listed bet. Only L&T is a bet, and we are already invested in L&T as part of our Diwali pick. But apart from that, not really a story that could actually play out in terms of in the listed space, I mean. I think we are out of questions. Any other questions, guys? We have, I think, another 2 minutes left. I hope all of you got the name change as well. The Stylus Analytics, the name change. The RMs will be sending you your agreements in the next couple of weeks, and we would recommend that you please sign it on a timely basis. Just a sign on the last page and the return. I think it's a very straightforward. There's nothing new as such that's going to happen on that. Right. Thank you everybody for joining in. Again, wishing you all a very happy and prosperous new year to you and your family. Happy weekend. Bye.